How to strengthen your trader mind. Hi, it's Charlie giving you today's video. So the one thing that the market is constantly trying to do to you is reject you. So one way to strengthen your trader mind would be to harden your mind to what? Rejection. Because the market is constantly rejecting you. It doesn't matter what your approach is, if I can write the word rejection. Whatever your approach to the market is, whatever your trading strategy, system, no matter what it is, it's going to get rejected. Your approach is going to get rejected time and time and time again. So let's give you an example. You've got a strategy, let's say with a 50% win rate, and let's be really crude that you're trading your strategy and over 10 trades it wins, so to speak. I hate to use the word win, but anyway, it's successful, it achieves its target or its goals 5 times, and it fails, so to speak, it gets stopped out 5 times. But of course they don't come in a random sequence, or they do come in a random sequence, should I say. They don't come in a logical sequence. So it might be, for example, that it's front end loaded, that you have 3 losers straight away, then you have 1 winning trade, and then 2 more losers. At this point, the average trader is going to be thinking, oh my word, I'm not enjoying this. And just imagine, this is just over 1, 2, 3, 4, 5, 6 trades. Okay. Now, we don't know that at this point that actually we're about to have 3 winning trades. So, okay, we go and get 3 winning trades and everything's looking rosier again. So, but you imagine if you get this number of trades in, you're going to start probably, if you haven't got that strengthened mind and that hardened mindset to rejection, you're going to be sitting there thinking, oh God, maybe I'll have to use another technique. Maybe I'll have to change. I need to go back and back test my system. It's not working, and you get that sort of thing. And you imagine you get this and it starts off like this. And in the end, we end up having 1, 2, 3, actually 4 winners here. 1, 2, 3, 4, 5, 6, 7. Oops. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Perfect. Okay. So, but it's come in that sequence. Now imagine if we had this sequence over not 10 trades, over the first 100 trades. So then all of a sudden, we know that actually the last 4, looking at this, therefore, if this was times by 10, the last 40 trades are all going to be winners. But can you imagine if the first 60 trades you've only had however many winners that is? 6. Is that right? So you've only had a few winners. You've had way more losing trades. You've had 50 losing trades at that point. Sorry, and 10 winners. Right. I know we'll get there in the end. So that's the problem with doing this on the fly, isn't it? So can you imagine you've got 50 trades in and you're saying, well, I've only had 10 winners and I've had 40 losers. My system, my approach, there must be something wrong with it. I'm chucking it in the bin. Now, that isn't a technical problem. It's a psychological problem, because you've got something which you've back tested and, and it's fine. And then you start trading with it. And then as soon as the random sequence of winners and losers comes along, you want to chuck it in the bin or feel like you need to tweak it and change it. Now, I'm not saying that might not be the case, but you haven't even done 100 trades here yet. And with a 50-50 split of wins and losers, they can come randomly. So this brings us back to the point of this, that you need to harden your mind to rejection, because you're constantly going to be getting rejection in the markets. Yes, we can have loads of winning trades in a row, but we can also have a load of losing trades in a row as well. And if you can't deal with the rejection, then how are you going to be there for when the winners come along? Because you've already moved on, you've quit, you've thinking that you need a new strategy or whatever it might be. So you've constantly got to come back to, okay, what's the random sequence? What's the random sequence of events that can happen when it comes to wins and losses with a given strategy? If it's 50-50, okay, yeah, it's possible that if it's a 50% win rate, that yes, they could come front end loaded and I could have a significant number of or drawdown period just purely by random sequence of events. And I've got to tell myself that is all it is. You need to remind yourself from a psychological perspective, look, it's just a random sequence of events. Yes, I'm trading probabilities, so to speak, but within those probabilities, over a relatively shorter number of trades, then anything can happen. Once you start getting to 100 trades, 200 trades, 300 trades, then the probabilities tend to come on your side. It's a bit like a coin toss. I've done studies with coin tosses and random heads or tails generators, and it's quite incredible in the short term how many runs of losses you can have in a row or runs of winners, because it's just a 50-50 heads or tails environment. But once we ran those tests, and we did this several years ago, over 1,000 coin tosses, more often than not, what happened when we got to 1,000 in total, it was distributing closer to 500 heads and 500 tails. So when you're trading with probabilities as far as win rates are concerned, then the more the number of trades that you have, then it will end up evening itself out. So be careful. I'm not saying you shouldn't go over your data and make sure that there's not anything that you can't improve upon, but you've got to be careful not to be tweaking your approach to the markets more so just because you're not enjoying the rejection of the markets. Because in every situation, the market is going to reject traders. Now, during this period down here to the downside, there will be a load of traders around the world who caught that and will be saying, wow, I had a great trade down there. But for every one of those, there'll be way more traders who were trying to buy and getting stopped out through that. So they were getting rejected through that period. But those same traders who were getting rejected through that period, if they were on top of their mindset and they were still, for whatever reason, looking to be on the long side, well, now they're sitting in some nice profit, let's say. I'm just making this up randomly. But but if their mindset wasn't acclimatized to the pure rejections that you get within the markets, they wouldn't have taken that trade, and they'd now be sitting on the outside of the market, frustrated. Oh, why didn't I take that trade? And the game continues. So the market is trying to reject you all of the time. Gamify it. Just think of that when you are having a few losers in a row, or a period of more losers than winners, whatever, and you're having a drawdown. Just remember, the market is trying to get you. It's just a game. It's trying to reject you. And if you succumb to that rejection, you just become a statistic yourself. Don't allow it to happen. And on that note, I shall see you this coming weekend.